Conditions remaining bearish, majority bearish on S&P 500 at 14-0, seeing that trend still continuing to accelerate to the downside. We're seeing on the 1 hour time frame, majority bearish at 14. We are approaching 618 retracement level. We're definitely deep inside of this corrective block right here, which is this 382 to 618 retracement zone. Slid right through the 382, right through the 50%, and now sitting right at that 618, 61.8% retracement. And that's connecting the high and low of this point. On the little bit longer time frame, we're still actually up in the momentum zone over the last couple of years, but we're just focusing here really almost the last year, 8 months, 9 months, going back to August, looking at this current trend and seeing a significant breakdown here on trend. We are, as I say, extended. We could get a bounce right here, particularly if we dip down a little bit deeper around this 5,400 range. We're seeing breadth significantly lower yesterday, down to that 30% range. That means 70% of S&P 500 stocks are trading below their 50-day moving average. We're also getting that confirmation here on trend condition at 14, the majority bearish on that trend for breadth, and seeing VIX. VIX has had this nice spike, getting a little bit of softness towards the upper end of this range, as we're seeing S&P 500 potentially getting a little softness at the bottom of the trend range on that 1 hour time frame. So just looking for potential bounce of an oversold state and a counter trend move back up in the market to retest some of these zones. Now, once we break through these zones, they become overhead supply and looking for resistance taking place at those areas. So now the market's got a lot of work to do to be able to climb back through these levels. But it can potentially happen fast depending on if there's any new catalysts that are in the market. We're dealing with a scenario now where we may be running into inflation still remaining a little bit high, but also recession, and sometimes that often referred to as stagflation, where inflation is still in place, but the economy starts to get into recession. That can be a problem going forward here as well. And with these market conditions, our current models are around 10% equity holdings, even less than that, which means 90% cash based on these overall market conditions currently. If we take a look at the short end of the yield curve, SHY continuing to show some bullishness here on the daily time frame, a little bit of a pullback here in the trend on the 1 hour for SHY. That's that short end of the yield curve corresponding to the 2-year note, which is in the downtrend, majority bearish at 13, but getting a little bit of strength here in the last session or two on the 2-year note, getting some strength right here into that retracement zone. 10-year also finding a little bit of strength right here as rates, potentially move a little bit higher. TLT working on that overall downtrend, majority bearish as well. So bond market still, dealing with the inflation scenario, dealing with the recession scenario, and markets are going to be watching all of those things, what the bond market is doing, and some of these economic numbers regarding inflation, regarding employment, regarding any type of economic sensitive data as well. Those are really the two core focal points markets are paying attention to currently. Dow Jones Industrial Average also weak here, majority bearish on the daily and the 1 hour, really expanded trend on this 1 hour time frame, as we've had just perpetual selling really for the last 2 weeks, and also attempting that 618 location. And again, Dow also some really broken downtrends based on what tariffs and everything that's going on. Markets are really starting to get a little bit skittish right here. The triple Qs finding some support here at that 618 range. Lots of resistance now, overhead supply for tech names. That being said, an oversold bounce could be developing at least some kind of support level. Same with Russell 2000. Those small caps really gotten crushed here the last year entirely, from November's high all the way till now, seeing those with some aggressive selling. USO, the oil ETF, finding a little bit of support here. You can see a little bit of a bottoming pattern here, a little attempt at a couple of support ranges around that 71. We'll see if oil gets any support right here for a move higher. GLD also looking at this is gold, some compression here on that 1 hour time frame and working its way back towards those all-time highs. Could see another breakout here in gold It's had a really nice run. We're fanned out towards the upper end of this range, but this pulling back, compressing the trend, and then expanding the trend on that 1 hour time frame is really the one to watch. Also, that daily, just where we're at in that trend, it's going to be a little bit tougher for gold to really get exuberant at these levels. That certainly could happen if equities really start to sell off. We could see gold have kind of a push higher, but look where we're at in that trend. Seeing some of these patterns as well in gold towards the upper end of that range. SLV also showing some real strength right here, and it has a little bit tighter compressed trend that hasn't quite expanded as aggressively quite yet as gold. SLV may be an option also there for the hard asset type play, which gold and silver tend to do that. Let's take a couple look at some stock ideas that do have some setups in the screens today. We've got MPAA, not fantastic. There actually are not a lot of good selections today. Not bad, but we want to see increased volume. Want to see a little more solid confirmation bar. But the formation, the pattern of where that is in this trend, is compelling. And when market conditions, if we do get a bounce here, some of these names that are starting to set up a little bit better may give us a push through. The other one to take a look at is EVER, which is EverQuote in that online health space, or excuse me, online insurance space. I think it's actually auto insurance. It might be health. I don't know for sure, but it's that definitely having a nice pattern right here. Similar formation, less volume here also, but in terms of the screens and the scans and the settings, these are filling in that based on some of that price pattern criteria as well. If you don't have access to those, there is a link in the description of the video that you can get into the Discord server and get access to those as well with just a simple one click to be able to download and save the chart layout setting. That'll do it for today's update. Everyone have a fantastic day today.